Good morning. It's Monday, the 23rd of December, and this is Govindraj Ethiraj, headquartered and broadcasting as well as streaming from Mumbai, India's financial capital on most days, but presently in transit. Before we start, now this is our last news podcast for the month and year. From tomorrow, we switch to feature mode with in-depth conversations and interviews specially recorded for this week ahead on a host of issues ranging from backcasting as opposed to forecasting as business strategy, which I do urge you to listen to, the state of the economy, outlook for 2025, and creativity in Indian advertising, just to give you a few examples. And having said that, now let's move on to our top stories and themes. The stock markets take a pounding on foreign investor selling, and the last week has no real good news ahead. India's direct tax collections are rising. What's driving it? Indians are willing to seek treatment for more disease conditions, including depression, and that is driving up sales of cures. And the rupee hits a fresh low, and forex reserves drop sharply. And steel imports hit a new high.
This is the Core Report with Govindraj Ethiraj.
A bruising week. It was a tough week for investors who saw wealth disappearing, with the Sensex falling over 4,000 points last week, and foreign institutional investors who started the month in the positive have now hit the reverse gear, taking the market down with them as they leave. So the week in question, which is last week, saw the Sensex falling about 4,092 points, almost 5% to close at 78,042, and the Nifty fell about 1,181 points, also close to 5% to 23,588. The Nifty Mid-Cap 100 and Small-Cap indices were also down about 3.5% each during the week. That's last week. On Wednesday, the Fed, that's the Federal Reserve, cut rates as expected, but scaled back its forecast to 2 reductions in 2025 from 4 earlier. So instead of 4 expected interest rate cuts, we will most likely only see 2, which has disappointed the markets because this means that interest rates will not come down and therefore tempt capital to remain closer to the United States or in the United States. Now, there are no real positive cues on the horizon unless some surprises are sprung, in which case the markets could be subdued as best heading into the year end. On Friday's trade, the 30-share Sensex fell about 1,176 points to close at, as I just said, 78,041. The NSE Nifty 50 was down 364 points. That's on Friday again to close at 23,587. Elsewhere, oil has not moved much either, with Brent crude quoting under $73 a barrel or $72.94 a barrel. The rupee hits a fresh all-time low and reserves fall. The rupee hit a fresh all-time low on Friday before ending slightly higher, overall holding its losing streak for 7 weeks now. It closed at 85 rupees 1 paise against the US dollar, up from its close of 85 rupees 7 paise in the previous session after hitting a low of 85 rupees 10 paise earlier in the session, according to Reuters. On Friday, the dollar index was down slightly at 108.2, down after hitting a 2-year high, while other Asian currencies were mixed, and Asian currencies have generally been weak against the onslaught of the dollar in recent times. Meanwhile, India's foreign exchange reserves fell by nearly $2 billion to an almost 6-month low of $652 billion as of 13th December, according to data from the Reserve Bank of India quoted by Reuters, which added that the reserves had declined by about $3.2 billion for the week of December 6th and in all are now down $52 billion from the record high of $704 billion hit on September 27th, which was also the turning point for the markets in many ways. I repeat, it's $52 billion down from a record high of $704 billion hit on September 27th. Steel imports hit an all-time high. India's finished steel imports from China have hit an all-time high during the first 8 months of the current year to March 25. Provisional government data showed, adding to concerns among domestic steel makers about these cheap shipments from China, according to Reuters. Total imports of finished steel were at an 8-year high, and India is the world's second largest crude steel producer. This was about 6.5 million tons of finished steel, a 26% increase, almost 27% increase year on year, according to data. So India became a net importer of steel in the last year, and imports have steadily risen since then as demand has slowed down in the major markets that's within China as well as elsewhere. India has produced about 138 million tons of steel last year, so the imports in absolute terms are not so high, but they obviously could be price determining. India has earlier set a general target of domestic production crossing 300 million tons of steel by 2030. Goods and services tax changes. The Indian Finance Minister led Goods and Services Tax Council meeting on Saturday, December 21st in Jaisalmer in Rajasthan, put an 18% GST on margin value of sale of used electric vehicles by businesses, and quite importantly clarified on the taxability of popcorn, saying caramel popcorn will continue to attract tax at the rate of 18%. Else, the council deferred its much-awaited decisions on reducing tax rate over life and health insurance premiums and also levying tax over food delivery by app-based platforms like Swiggy and Zepto and Zomato. The panel comprises representatives of all states and union territories. It also clarified, according to Mint, that pre-packed and spiced popcorn will attract a 12% tax rate, while 5% will be levied on unpacked and unlabeled ones. The GST Council cut the tax rate on fortified rice kernels used for public distribution to 5% from 18%, and also put an 18% tax on sale of second-hand cars by companies, which could dent the businesses of used car sales companies as it appears right now. Direct tax collections rise. What's driving it? The government's net direct tax collections for 24-25 till December 17th rose about 16.5% to 15.8 lakh crore rupees, thanks to strong personal income tax collections, though growth in corporate taxes remained moderate, and more on that shortly. Gross collections rose about 20% to 19.21 lakh crores. Refunds rose about 42% to 3.4 lakh crores, that's 340,000 crores. Net corporate tax collections grew about 8.5%, and the corporate tax mop-up largely reflects the relatively slowing profit growth by India Inc. in the first half of 2025. More on that shortly as well. The growth rate for corporate tax collections is lower than the budgeted growth of 10.5%. However, net personal income tax collections has risen by almost 22% to about 8 lakh crore rupees for 24-25, again till December 17th. Collections from securities transaction tax almost doubled to 40,000 crores during this period. So I reached out to Dinesh Kanabar, CEO of leading tax advisory firm Dhruva Advisors, and I began by asking him how he was seeing the rising tax collections, what was driving it, and more importantly, what he was looking out for from the coming year, including the proposed new direct tax code.
Two broad things which come up for 2024. One is we have seen a record number of IPOs. And when you see record number of IPOs, not all of them are primary, many of them are also secondary. And therefore, if I may say so, the record collections, direct tax collections, are primarily as a result of some of those restructuring which has happened, money coming to the company, investors or other promoters selling their shares. Another is, of course, the stock market boom and the money which people have made there. As you rightly observed, if one looks at basically corporate tax, the profits have been quite muted and they themselves do not warrant a 20% increase, which is what we are seeing. But it's largely capital gains, it's largely everything happening on capital market side IPOs. So that's one part. If I look at 2024 and directionally, I think 2-3 things stood out. First and foremost, whole thing in the budget where they scrapped the angel tax. And I think that was one of the best moves that the government could do. It took number of years for that to happen. Fair enough. You don't know, and I can't tell you how many transactions which otherwise were getting stalled only because of this perception that will your valuation be accepted, not accepted, and finally the government said, okay, doesn't matter. So that has been one very significant thing. The other thing, which has happened in 2024 is that the Supreme Court has passed judgments in favor of the revenue, and ostensibly some of them otherwise do not seem to make logical or legal sense. But it is only, so for example, there was this whole issue as to when could or up to what period of time could the government reopen assessments when the period was brought down. So when was the past law applicable, when is the current law applicable? And if you would have gone to any legal counsel, not necessarily taking a view only for the SSEs, but the general reading seemed to suggest that old matters can't be revived, etc., etc. And the government issued some 19,000 notices. And the Supreme Court came back to say that we cannot pass an order which negates all of this, so all of this is legal. So One is seeing a trend where the Supreme Court is going on to say that we cannot frustrate the revenue and its efforts to try and collect taxes. So that's be one very, very important change.
Okay, so let's look at 2025. We've got a dramatic rehaul of the tax code that has been promised, for which feedback is being solicited or has been solicited and will go on till the budget. So, thematically, what are you looking out for and what do you expect?
The number of versions that I have heard from the government sources on what is likely to happen is not funny. I don't think they have made up their mind. There are different people at fairly senior levels giving different messages. So whether it's going to be a new code itself or are they going to simply rewrite the Income Tax Act? Question number one. Question number two, if they are rewriting the Income Tax Act, it is only to simplify the law or are they going to make some drastic changes? Question number two. And as many people as you ask, you get different answers. Then are all these changes going to come one shot or are they going to come at different points of time? And again, you get different answers. The latest which I have heard, and I don't know whether this will stack up or not, is that in the budget, there will not be too many changes. But in the budget session, a new bill will be introduced to make the changes. And then depending on whether it's going to be a code or not, it will be referred to select committee and then things will happen from there. So that's one part. So I don't know directionally where this is going. And the reason I am saying getting so many different things seems to suggest that the government itself is still to make up its mind on how far to go, what to do. The fact that Sanjay Malhotra has now moved off from Revenue Secretary to RBI, how much impact, because he was driving the whole process. And sure, there is a good team, big team, etc. We have interacted. Niti Aayog, but there is a disconnect. And then Niti Aayog is involved and whatever else. So let's see where all of this goes. I'm looking hopefully to see one very important change, which is with regard to dispute resolution. So the point today is that once a dispute starts, it takes whatever 15, 17, 20 years before a Supreme Court decides. And while over a period of time, the government has enhanced the limit or the monetary amount which should be involved for the government to appeal, still almost everything passes that threshold. For everything ends up with the Supreme Court. And the question is there a way in which a resolution can be found on tax litigation without it having to go through all the rounds of the court? And a number of suggestions have been made in this direction. Government has invited so many people, India, overseas, looked at what is happening globally, etc. One will wait to see where does this go. But number of changes expected there.
And any one area apart from dispute resolution that you would hope to see, which may not have otherwise been on the horizon, or something a little, let's say, leap of faith kind of thing?
Yeah, I think one other thing is on restructuring. So what has happened is that in terms of mergers, amalgamations, restructuring, there are provisions in the Act which are very poorly worded. So when you go and ask a tax officer or the legislators that, is this what you intended? The answer is no. Is the way the law you have drafted capable? Yes. But it is lying there for years and years and years. And one is hoping that some of those cobwebs will be removed.
That's a good note to end on. Thank you very much, Mr. Kanabar. Wish you a very happy new year ahead as well.
Thank you. All the very best to you also.
Anxiety is driving more sales. There are more Indians now getting treated for neurological conditions, including depression, and particularly young Indians, mostly because they're willing to talk about it or willing to get diagnosed. Overall, the pharma industry in India has grown on the back of several rapid growth categories like weight loss, apart from cardiac, which has now become the number one category in 2024, and more on that shortly. Overall, the industry has grown 8% to 2.2 lakh crore rupees, or that's 220,000 crores, a number which is considered good by industry analysts. Non-communicable diseases continue to grow in India, reflecting several factors, including, of course, our changing lifestyles and our response to them, or perhaps lack of it. I caught up with Sheetal Sapale, Vice President at Pharmarack, an industry tracking body which has analyzed the year's data, and I began by asking her what were the big trends in pharma company sales and drug sales this year.
The pharma market has been an attractive market for so many years, and even this year has been a blockbuster year for the market. Though the market has grown by just 8% for the year, but then if you look at the base is a huge base. Okay, so on this huge base of 2.2 lakh crore, 8% growth is a significant growth that the market has shown. Over a period of time, if you see, the cardiac category has moved to the number one position. Earlier, it used to be the gastro, anti-infectives, which were more of the acute conditions which were topping the chart. But today, cardiac conditions have become the number one category. This is also indicating that non-communicable diseases are fast catching up. Cardiac diabetes is proving to be a very important market this year, or in the last few years. In case of diabetes, we have seen that good amount of molecules went off patent. We have seen good amount of combinations of DAPA which have come in the market, and these DAPA combinations, branded generics, they have pushed the growth of the market to a good extent. Also, if you look at the semaglutide, which is the anti-obesity drug launched by Novo Nordisk, it has done wonders in terms of changing the dynamics or the sales trends of the anti-obesity segment. In the last 5 years, the anti-obesity segment has actually quadrupled. In fact, this one brand from Novo Nordisk, it has become almost 350 crore brand, or almost touching 400 crores in less than 2 years. This is the amount of pickup that is there in the market for this type of product. Though expensive, people have the disposable income to buy it, use it. While gastro and other anti-infective segment, they continue to grow in terms of their normal trends, but lifestyle diseases in terms of cardiac and diabetes have picked up well. One more segment which is really doing well is the derma segment. In derma segment, again, we have seen a good amount of growth in the cosmoderma segment. It's not just the pickup of cosmoderma products like, Botox or other remelanizing agents which have picked up well, but we see good number of specialty companies entering the market, focusing only on the high-end cosmoderma segment.
Right. And when you say cosmoderma, you mean, you mentioned Botox, so that defines it. But is there something else that people are using or buying?
I mean, Botox, it would be a general thing, but everything that comes under the anti-aging category has picked up well. Some products which are, for having a very even skin tone, like hyaluronic acid and all, those products have done well. I would actually classify it more into the anti-aging, anti-wrinkle category, which have picked up well.
Right. So, so this is about looking young, but there's nothing. I mean, I'm assuming there's not really anything which actually tries to make you young, for which research is a lot of people are spending time and effort in other markets like the US.
Yeah, that's why we're saying cosmoderma. It's a cosmetic derma category. It's picked up well.
Got it. Cardiac specifically. So the market's also growing because younger people are experiencing cardiac issues. Is that correct?
Yes, if you see the rate at which our population is growing, it's growing with less than, the rate of growth is less than 1% every year for the last 4 or 5 years. However, the population dynamics has changed, or the demographics of the population. More than 50% of the population today is in the age group of 20 to 60 years. It's more of a working population, and today's lifestyle or professional lifestyle, if you see, it is good amount of stress, lot of sedentary life, and a good amount of consumption of not so healthy food. So there is, this lifestyle diseases are actually picking up on the younger population, and that is also leading to this type of growth dynamics that we see in the cardiac sector.
Right. And the other area, as I understand, where you're seeing a market growing because either younger people are, let's say, getting treated, or the fact that they're aware of their conditions and are therefore getting treated, which is depression and
Yes,
neurology.
yes. In the last 5 years, post-COVID, in fact, we have seen neuro segment doing well in terms of growth. It's not that all of a sudden people have started suffering a lot of depression. That may not be the case. While neuro segment or anti-depression is one of the conditions which falls in the lifestyle diseases, but getting treated for depression is no longer considered to be a taboo. So people are open about the condition. People are willing to get treated, and it gets discussed as a normal disease condition and not as, something which should be hidden from the society. So it's like, if you're suffering from depression, the treatment for depression gets discussed in the same way as I would discuss treatment for hypertension or diabetes with my family or friends.
Right. And, like you pointed out how semaglutide has become a big drug and phenomenon, and that's quite visible. And is there something that is where you feel, it's very small today, but is growing and could grow the next year? which also reflects maybe changing health conditions or disease conditions?
Actually, today it is doing well. It has picked up well in the market. In fact, obesity and obesity conditions which lead to further complications, a lot of awareness has been created even by the company, and that's the reason why the pickup is there. Good amount of research is available or studies are available online. Though the product is a little expensive, people are willing to consume this product because it's like a ready-made solution for reducing your fats. But the product may actually go off patent also in a few years from now. So probably this type of growth curve may not be seen for a longer period of time. But at the same time, there will be newer products which will enter the market. There will be Wegovy, there will be Ozempic that will be entering the market in the near future. So even that will keep on pushing the growth of the markets. But at the same time, like the way we have seen in the diabetes segment, once a blockbuster molecule goes off patent, a lot of generics enter the market and they ensure that the product is available to the less affording population. So the volume consumption would actually increase.
Right. Okay. I think in your report, you've talked about combination drugs, and that was, let's say, a phenomenon that picked up pace last year, or rather in 2024. So do you see that accelerating, steadying?
Combination drugs in the sense DAPA plus metformin. So it's like earlier, traditionally we had SUMET, which was the base combination which for treating diabetes. Then DPP4 inhibitors came into picture, and then SGLT2 came into the picture. So each type of molecule had its own USP for treating diabetes in by controlling different aspects, physiological aspects for this diabetes. But now in India, we are allowed to have different types of combinations and they have picked up pretty well. So I think whatever combinations would be hit in the country have already been launched. No more new combinations in diabetes would come unless and until a new blockbuster molecule enters the segment. Of specifically for OAD, we don't see any new entrant as of now.
Got it. Sheetal, it was a pleasure speaking with you. Thank you so much for joining me.
Okay, thank you so much.
So before we go, here is some feedback from you that came in the last couple of days, and we thought we'll take a few and then move on. Nandu Sachu says, what happens to the market is very clear. Today, the market is going to prove that the Federal Reserve cut is not the reason for the Indian stock market loss. The real issue is SEBI, that's the Securities and Exchange Board of India, versus option traders. All other reasoning is propaganda for justifying market crash. Well, there is a problem there to some extent, which is that option trading is now constrained for various reasons. Now, whether that's driving the entire market down, I'm not too sure. Thank you anyway, Nandu, for your feedback. Rajesh Krishnan says, Govind, I start my day every day listening to your core report. Well done. Thank you, Rajesh, very much once again. Ishan Reddy says, now I get my dose of what's happening in the economic world to start the day. Thanks for advancing your show to early morning and in India. Makes very relevant. Thanks for everything. Thank you, Ishan Reddy. We are live at 5 a.m. Indian Standard Time, 7:30 a.m. Hong Kong and Singapore. So yes, you can catch us early in the morning, maybe during your walk or, as I heard recently, during your workout. Mohit Gupta says, listening to this show is the first thing I do in the morning. Thank you very much, Mohit. Nalini Chandrasekhar says, you maintain such a high quality of unique content on a daily basis. It's really incredible. Thank you, Nalini. And finally, before I go, thank you all for that wonderful feedback. And thank you more importantly on my behalf, as well as my colleagues, Joshua, Richa, Shiva, and Yash, who work on this program. And we all look forward to hearing more from you in 2025. And on that note, thank you very much. Have a great year ahead and see you soon. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.